Ladies and gentlemen, welcome back to the channel. We have a lot of broad market news to get into today and specific Tesla news to talk about. Tesla is up about 2.5% today, one of the bigger performers on the day today. It's not a super bullish day out there for markets, and Tesla is having this pretty extreme outperformance, breaking out above the 50-day moving average, which has been a big level we've talked about on this channel now. And today, the talk is about robotics and Optimus and the government. So, huge development there. Ladies and gentlemen, we have a lot to get into in today's episode. Hit that like button as well as subscribe to the channel if you have not done so already. That's free 99, cost you absolutely nothing to help push these videos out to more and more people and better our investments, okay? If you guys want to take it a step further, come trade and invest with us. Check that link out down below in the description of today's episode. But with that said, let's get started. Okay, so we're going to start today's episode with all of your Tesla stock news today, and I want to start with the biggest news of all. It says here, Tesla rises as Trump administration signals a robotics push. Tesla shares gained 1% after reports that the Trump administration plans to accelerate U.S. robotics development. Politico says Commerce Secretary Howard Lutnick has been meeting with robotics CEOs and may back an executive order next year. Robotics stocks surged on the news, including Serve Robotics, Rich Tech Robotics, and Teradyne. The Commerce Department said robotics and advanced manufacturing are key to bringing production back to the U.S. The initiative follows the administration's AI acceleration plan, with a federal robotics working group reportedly in the works and new legislation under consideration. There was actually talk and rumors today about the U.S. government actually purchasing Optimus robots as well by the end of next year. So, I mean, this is big. For Tesla, you know, the talk has been robotaxis and deliveries and, you know, everything else besides Optimus for a long time. Optimus has been this Hail Mary aspect of Tesla's business from the investment community, and now they're saying, oh, wait, there's a government tailwind coming for Tesla's robotics program, and this is huge. I mean, robotics is going to be the biggest venture for Tesla by far over time, and it may have just gotten a little bit of turbocharge to it. Now, Joe Tetmeyer on X is also reporting that he's seeing a lot of interesting Cybercab castings at Giga Texas, and a Model Y body in white next to paint stands on the north side of the paint shop. It also looks like a overt crash testing setup is being set up in the Giga Texas facility. Now, Tesla has also released a new video of Optimus running, and you know, they're starting to appear more human-like by the day. There's a lot of people that have recently talked about the hands, which are interesting. On these robots in the back, on these Optimus bots, they're gold hands. On this one that's actually running, it's the black hands, and these black hands look eerily similar to human hands. Let me show you. Look at these hands. In gloves, you would never be able to tell the difference if that's a human hand or a robot hand. I mean, they're literally eerily similar to human hands. Look at that. That's pretty cool. Now, Tesla China today is showing off Giga Shanghai's speed, now rolling out a car every 30 seconds. Now, Tesla's EU Policy and Business Development Manager, Ivan, in a new LinkedIn post says, quote, "We are currently offering ride-along experiences in Germany, France, and Italy as we are working towards an approval of FSD in Europe. This is a great feedback opportunity from the general public, which we encourage to record and share their experience." He says, quote, "For those who did not manage to book a slot in December, stay tuned as we are wrapping some Christmas presents." Waymo has announced that it is now testing in 4 new cities in the US. They say, starting this week, we'll begin manually driving our fleet around the city as we begin preparations to welcome public riders in the future. You're looking at Baltimore, St. Louis, Pittsburgh, and Philadelphia here. So, again, this is good news for Tesla, right? Because it's really a regulatory thing at this point. Like getting the regulatory, approvals in place. Tesla is testing in similar cities, but once one gets regulatory approval, it becomes easier for others to get regulatory approval. And the market size here is massive. Like nobody owns the robotaxi market. There's going to be competition. Waymo's not going bankrupt, okay? Waymo is going to be around, but Tesla is going to dominate the market, in my opinion. Now, the Trump administration is poised to undo Biden-era fuel efficiency standards it blames for driving up the cost of new cars. Executives from Detroit's major automakers are slated to attend a White House announcement today of proposed fuel economy standards. They say, quote, "We're bringing back the automobile business," Trump said during a cabinet meeting Tuesday. "We're bringing it all back. I think we'll be bigger than we've ever been in the auto business." Trump also reiterated that despite his fondness for electric cars and his belief that hybrid models really are working really well, it's important to ensure consumers can buy the automobiles they want. He says, quote, "I terminated the insane electric vehicle mandate, and look, some people that make electric cars weren't happy with that," Trump said, "but we have to do that because we have to have a choice." New documents today indicate that Tesla privately cautioned the UK government that loosening EV regulations would affect fully electric sales and threaten the country's climate targets. Tesla said it was essential for electric vehicle sales that the government did not introduce new loopholes known as flexibilities. Changes, quote, "will suppress battery electric vehicle supply, carry a significant emissions impact, and risk the UK missing its carbon budgets," Tesla stated. And Waymo has announced that they are now fully autonomous in Dallas, meaning there is no human driver at the wheel at all. In option activity today, it is incredibly strong in Tesla stock from hedge funds and institutions. You have 147 different trades totaling $131 million with a positive order value of 92%. So 92% is quite bullish. Now, you only have about 2.3 thousand shares today, or about 2,300 shares today, that are being on net sold short. So it's kind of a slow day in terms of what short sellers are doing with their positions. But overall, looking pretty good under the surface. Now, in your broader markets today, there was a lot of news. But before we get into that, let's take a look at what's happening on the headlines today, or your headline indexes. The VIX is down 2.5%, sitting at 16.16. So fear has really come down recently, but still elevated from your lower end ranges where you can get into 15 or the 14 level. But fear is largely gone in that metric. Okay, now there's still a lot of fear and uncertainty within single stocks. But from the VIX and the S&P headline perspective, not a lot of fear there. Russell 2000 is up 1.07%. It is the leading index today. NASDAQ up 0.1%, so barely green. S&P up 0.24%. The Dow is up 0.64%. So the Dow and the Russell are the leading indexes today. And this likely has to do with the economic data that came out this morning. You can see today we had two important sets of data. Number one was the ADP employment change. For last month, you were at 42,000 positive jobs. That was actually revised up to 47,000. Okay, so an upwards revision for last month. The expectation for November was positive 10,000 jobs. You came in at negative 32,000 jobs today. So that was way worse than expected, to say the least. Okay, you got a lot of data out for September as well. Pretty much came in line with expectations across the board. Wasn't a big shock in any of that data. Again, it's for September, so markets I don't think really care about that too much. It's outdated. You did get the ISM services PMIs that came in at 52.6 on the headline. That actually beat estimates of 52.1. Business activity came in at 54.5, meeting expectations. Employment came in at 48.9, beating expectations of 48. New orders came in at 52.9, missing expectations of 56.4. But look at this. Prices came in at 65.4, beating expectations. Well, technically missing, but it's a beat from Wall Street standards of 70.3. So a little bit weaker in new orders, better in business activity, better in employment, and much better in prices. So that's actually really good. Now, it's survey data. It's not hard data. So, Wall Street's only going to look at it so much. But it is raising the odds of a January 26th rate cut. Okay, the odds yesterday of a rate cut in December 10th, you're almost certainly going to get a cut. Around an 85% chance of a cut December 10th. So that's not really what we're looking at this point. What we want to be watching for in the next couple of data sets is what happens to the odds of a cut January 26th. Okay, yesterday the odds were 29.3% at yesterday's close. Today, they're now 31.2%, so that's up a bit. But from last week, you were at only a 22.6% chance of a cut January 26th. And again, now you're at 31.2%. The odds of a pause or no cut in January, 58.7%. So that is still the most likely outcome in the Fed funds futures market right now. But if you get data that looks like this, December 16th, and the Fed's kind of open-minded to going either way, pausing or cutting January, you're going to pretty shortly here be pricing in another cut in January. And that's just going to help fuel this this market. And what I believe is going to be a risk-on end-of-the-year rally. A lot of areas have recovered recently from some of the selling that we've seen, some of the correction that we've seen. One area that has not recovered at all is the risk-on area, the AI trade, the hyper growth trade. A lot of these companies are high-quality companies, right? Running tight ships, and they just have not recovered at all in this market. The headline index has, right? The S&P has largely recovered the decline, but it's in the healthcare, the staple names, the large companies. A lot of the small caps have, again, not recovered at all. Now, again, there's still a lot of fear out there, not in the headline S&P, but in single stocks. CNN Fear and Greed Index is sitting at 24. Yesterday, it was at 18. Well, we're getting an update now. It's at 27. So still very fearful here. Market momentum is fear, stock price strength, extreme fear, stock price breadth, extreme fear. These are two areas that I think you have to see start to recover to get the markets to continue to move higher here, right? Stock price strength, almost no recovery. Stock price breadth, very little recovery so far. Okay, you need to see a broader market rally. You need to see the risk on areas also begin to work for a December rally, in my personal opinion. Put and call options in fear, market volatility is neutral, safe haven demand, extreme fear, junk bond demand in extreme fear as well. Now, again, we did get a new AI investor sentiment survey on Thanksgiving. We're going to be getting another one coming out tomorrow, but basically in the last 2 weeks, bullish investors fell about 1% to 32%. Neutral investors rose about 2% from 23% to 25%. And bearish investors fell about 1% from 43.6% to 42.7%. So, it's pretty unusual to have more bears than bulls. But right now, there's 10% more bears than bulls. And I don't know how much these numbers are going to move in the reading that comes out on Thursday. This is really unusual considering the S&P is at all-time highs. Okay? It's highlighting the fear out there in single stocks, right? It's highlighting you haven't seen that full recovery yet. Okay? And I think your portfolios would agree with that. If you're invested in a lot of the AI stocks, you're like, how's the S&P at all-time highs? My portfolio is barely off of yearly lows for a lot of people. Okay, and it's because of what I'm highlighting here. You've really only seen the big stocks work that have helped the index move higher. But I think in December, especially as we get closer to a rate cut and maybe even pricing in another rate cut in January, as Wall Street comes to realize 2026 has a really good setup, right? Where we're going to be looking at hopefully lower inflation, better consumer, more rate cuts, a new Fed chair that is more bullish. AI is alive and well. Big beautiful bill, no tax on tips, no tax on overtime, all of that, as we've talked about many times on this channel. But also real estate picking up next year. The backdrop looks really good for equities, and especially for that small cap risk on trade. Not even necessarily small cap, but risk on trade, like the AI trade. U.S. Treasury's Livorna says we need the Fed to help, but the economy will turn. She says AI is complementary to the existing workforce. We need skilled trades despite AI. She says we're expecting de minimis inflation effects from tariffs next year. She says we don't see tariffs as being inflationary. Inflation is rooted in services, which is very much true. Historically, goods tend to be negative in the inflation report, right? Your TV that you bought 5 years ago is cheaper today than it was 5 years ago, right? That's factual. Most things you buy, you can buy a better computer today than you could 5 years ago for the same or better or lower price. Okay, I just bought a computer recently because I would get through editing a video or recording a video, like a 30-minute, 40-minute long video, my computer would crash like 5 times a day. I'm like, okay, I gotta upgrade. When I went to the store, you can get a computer that's much better than the one I bought 5 years ago for a cheaper price, or it was around the same price, okay? Which is, again, that's what happens with inflation in this country. Goods tend to go down. Services tend to go up a lot more than 2%. And she's making the argument that tariffs don't really affect services much. She also says that it appears that we moved close to 4% GDP growth in Q3. Also in the news today, NVIDIA's Jensen Huang will be visiting Capitol Hill to answer questions about AI. Taiwan says today that U.S.-Taiwan cooperation has even expanded under Trump. U.S. Treasury's Livorna says we don't need a 50-year mortgage if the Fed was lowering rates. And the Treasury says today that we're expecting more growth in 2026 to emerge from the Trump Tax Act. And this is something I don't think a lot of people on Wall Street are paying much attention to for part of the bull case for next year and the consumer getting better. I mean, no tax on tips. If you make $25,000, that's going to be anywhere from $2,000 to $5,000 you're going to get back in your tax return. That's like a stimulus check for 60 to 80 million Americans next year, let alone overtime, which is capped at $14,500, which the tax on that is like 30 to 40% in most cases or more. I mean, that could be thousands of dollars as well. AMD's CEO Lisa Su today says memory shortage might be a minor perturbance to the AI market. Howard Lutnick today says we have to train 5 million Americans for chips jobs. Lutnick today says the U.S. can reshore advanced manufacturing with robotics. Lutnick says a deal with Taiwan will bring more investment to the U.S. Lutnick says we're in the midst of discussions with Taiwan. Lutnick today says we will have tariffs no matter what going forward. Lutnick says that we're going to win the Supreme Court case on tariffs. But Besant today says Trump admin will be able to replicate tariffs even if it loses the Supreme Court decision. He says here, quote, Besant cited several sections of 1962 Trade Act that give the president sweeping powers over import duties. He says, quote, we can recreate the exact tariff structure with sections 301, 232, and 122, he said during an onstage interview at the New York Times Deal Book Summit today. U.S. Commerce Secretary Lutnick says European economies are attacking AI development with all of their rules. And Lutnick says he sees GDP over 4% in 2026. And today, the U.S. November ISM Services Prices Paid Index fell to a 7-month low. So, as we talked about earlier, this was really good. Truist today says the bull market is still strong. Truist's Keith Lerner says the U.S. bull market remains intact with neither the economic expansion nor equity rally near its end. He expects 2.3% GDP growth in 2026, supported by Fed cuts, tax relief, and AI-driven spending. Corporate earnings are forecast to grow in the low double digits, with tech and AI leading, broader market participation, small cap opportunities, and constructive economic factors, including a $158 billion tax refund boost. Again, I've talked about this so many times. No tax on tips, no tax on overtime. Okay? Being able to write off auto loan interest, different changes to CapEx, where you can depreciate assets 100% in the first year, things like that, okay? So they have a $158 billion number on this. That's a lot of extra spending. Just like Black Friday, like Cyber Monday, did like $12 billion in spending, and that was a record, okay? You're looking at like 13 Black Fridays worth of, spending in additional spending next year, or spending power next year, being refunded back to Americans. That's substantial. He says, support continued market gains despite potential volatility next year. Bessent says that private credit growth is a sign that bank regulation is too tight. And Bessent says the Trump admin and regulatory changes will unlock $2.5 trillion more in lending capacity from banks. And Bessent says today the U.S. is a very good ally of China and Taiwan. Relationships are unchanged. Bessent says, quote, I'm very optimistic about the economy next year. CapEx is up. But he says that certain sectors of the economy have weakened and we need interest rate cuts. Scott Bessent today says Trump has normalized the idea of a 15 to 20% tariff. Now, also worth mentioning today is Bitcoin is holding up. It's holding its rally from yesterday. Bitcoin down a little bit in the last, couple of hours, but sitting just under 93,000 per coin. There's been a lot of talk on Reddit and StockTwits and other, social media platforms around that 97,000 level on Bitcoin starts to trigger short sellers covering on a lot of short positions, which basically means you could see a pretty rapid rise from that level and breaking above the 100,000 level. Okay, you can break above 100,000, you get back to 110, 120 probably pretty quickly, and that would also help to spur risk on stocks in this market, in my opinion, as the two have been pretty correlated. Now, we do have some pretty important earnings happening today in after hours as well. You have Salesforce, Snowflake, C3 AI, UiPath, Five Below, Health Equity, and PVH. These are big for the AI trade, right? UiPath, this is one that I've actually been buying pretty aggressive recently, so we'll see how that goes. They have partnerships with C3 AI, Snowflake, NVIDIA. Coincidentally, the Snowflake and C3 AI report earnings today and after hours as well. So some pretty big AI names reporting today and after hours. Tomorrow in pre-market, you have Kroger, Dollar General, Hormel Foods, Build-A-Bear Workshop, and TD Bank. And then in after hours tomorrow, you have Rubrik, DocuSign, Centennial One, Samsara, ChargePoint, Ulta Beauty, Hewlett Packard Enterprise, and Sportsman's Warehouse. And then Friday pre-market, you have Victoria's Secret. Now, as far as tomorrow, you do get initial jobless claims. You're expecting around 220,000. Last week, you had the lowest number since April, where you came in at 216,000. So you do want to see a low number because you don't want a recession, right? But you don't want to see something so low that they're like, it throws into question whether the Fed would even discuss a rate cut in January. Now, tomorrow morning at 8:30 in the morning, you're also going to get Challenger job cuts. These are planned layoffs. You're expecting 98,000. It actually could come in lower than that, considering how strong the holiday shopping season has been so far. There's probably not going to be a whole lot of planned layoffs. But last month for October, you were at 153,000. So that's going to be a big data set that will also move the needle for projected rate cuts in January and move around your small cap trade tomorrow. Now, on Friday, we are going to get some data as well. Core PCE price index month over month. This is the Fed's preferred metric of inflation, but it's for September. Remember, we did get these September and I believe the October CPI report while the government was shut down because of the Social Security cost of adjustment, which I estimated at the time the only reason the government would put out CPI during a government shutdown when they're not releasing other data is because it's going to come out really good, and it came out really good. Okay, so this is the lagged behind PCE number from September. It could move markets, but I doubt it. You do get Michigan consumer sentiment for December as well Friday, personal income and personal spending on Friday. But again, these data sets, although they're very important, are for September, so it's not going to tell us a whole lot about what's going on right now. And Wall Street cares about what's happening right now and what's going to happen in the future, not what happened 2 months ago. And again, specifically for Tesla stock today, the stock is up about 3%. You're breaking above that 50-day moving average, which was at about $434 per share. I'm assuming you're going to get a close above that today. If you don't, you're going to have a pretty aggressive reversal here in the last hour or so of trading. It would be pretty nasty. But from here, you really have room to break into the 500s, right? You have room to see a pretty explosive move, especially if crypto starts to do well, if we don't get any big surprises in December, seasonals, and the tactical trade that we've talked about for a while, and really the outlook for 2026 being so strong and supportive for equities. You definitely don't want to be short in Tesla right now. Let me just say that. The MACD is also about to go positive. MACD line is above the blue signal line by quite a large margin at this point, and that historically has led to quite a rally. The RSI sitting at 56 has a lot of room to strengthen as well, and when it strengthens, it tends to continue to strengthen. If you get above 70, which is the overbought level, then you could go well into the 80s. And at that point, you're going to see Tesla like a $550 stock if that happens by the end of this year. So let me know your thoughts on this down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. Check that link out down below in the description of today's episode. If you guys want to come join the trading community, come invest with us. Have a great rest of your day, and I will see you in the next one.